Friends, good day. I know everyone is now only talking about the Bitcoin spot ETF application, the alleged hacking of Gary Gensler's Twitter or X account with publication of the information that all applications were approved. Then there was a retraction that it was all the result of the hack. It's all interesting, of course, and we're seeing good Bitcoin volatility that you can make good money with. But today I want to talk about strategies related to stocks. And today you can make good money with MicroStrategy stocks. The founder of the company is Saylor, one of the most popular Bitcoin holders, who actively promotes Bitcoin and has played a huge role in popularizing this asset. MicroStrategy has started buying Bitcoin in 2020. But let me start from the beginning. In early 2020, Saylor learned about Bitcoin and, having mastered the technology, came up with the following plan. A company issues bonds, gets dollars with those bonds, and buys Bitcoin with the dollars. The Bitcoin grows, the company gets even more money by issuing more bonds, and then buys Bitcoin again. In the end, the company has 189,000 Bitcoins. They are now worth $5.9 billion. The average purchase price of Bitcoin is $31,000. The company itself is not particularly interesting because it is a software developer that few people know about. But last year, the company announced the launch of some applications for the Lightning Bitcoin network, and that's the only thing the company has stood out for in recent years. The company's main profit comes primarily from holding Bitcoins. If you look at the chart, you'll see that something interesting has happened. By holding so many Bitcoins, the company's stock skyrocketed in 2021. That's when Bitcoin surpassed 60,000. And at the end of the year 2021, there was another rise in Bitcoin and then a swift drop. The stock plummeted as well. So, MicroStrategy stock is highly correlated with the Bitcoin price. In fact, MicroStrategy shares have become a kind of ETF. Institutional investors can't buy Bitcoin directly from a crypto exchange, but they can buy MicroStrategy shares and get the Bitcoin delta through intermediaries. But on January 3rd, Saylor revealed his 2024 trading plan, which is to sell 5,000 shares of the company every day, which Saylor has. He's no longer a director of that company. He plans to sell these shares and buy Bitcoins. According to information from the Securities Commission, Saylor has sold more than $200 million worth of shares. The man plans to sell these shares for a few more months. Naturally, when there's such a stock sell-off, and when a famous person publicly announces that he's selling shares of a company, it reflects negatively on the company's stock price. After all, other holders will also think, why should I hold these shares? But since everyone realizes that Bitcoin ETF applications will be approved one way or another, the opportunity to buy Bitcoins through ETFs will be open. So why buy MicroStrategy stock? This new bond scheme isn't even particularly profitable anymore. With rates over 5%, it's expensive to issue bonds. Consequently, we're seeing a decline in the stock price of this company. On January 2nd, the company's share price was at its peak, 720, 730, but here on January 3rd, Saylor announces his plan. It's already known that he sold a bunch of shares, and here we can see a big fall. A fall that goes on and on. Even though Bitcoin is not falling, it's only rising. So, what strategy to use in this situation? If you're trading linear instruments, you have little choice. You can close the long if you have these stocks, and there is no special reason to enter this asset. Or you can get in short, if the broker allows you. But the options trader has more interesting alternatives. First, let's look at volatility levels. MicroStrategy has pretty high volatility levels. 90, 88, 86. It's a good idea to open a ratio spread. I've built the following strategy. If we don't expect MicroStrategy's share price to rise significantly, we can open a ratio spread. But remember, the company owes 189,000 of Bitcoins. And if Bitcoin goes up, so will the stock price. We need to catch the balance. In my strategy, I bought a call option with strike 600 and sold 2 call options with strike 720. I got a very good credit, over $2,000. If MicroStrategy's stock price does not exceed $600 before January 26, we will earn more than $2,000. If the price exceeds $600, since a rise is still possible, and reaches 620, our potential profit is more than $4,000. The break-even point is at the $660 level. If the price exceeds 660, we get 100 shares of MicroStrategy, in short, at 660 per share. Let's find that break-even point on the graph. Here, 660. This is pretty much the high of the price when Saylor announced his trading plan. Ratio spread is not the only one way to make money in this situation. Now let's look at another variant. Since the approval of spot ETF applications is imminent, we should not expect the MicroStrategy stock price to fall too much. Therefore, we can try to sell the put options. I choose the expiration date of January 26 to avoid hitting the reporting period at the very end of January. I'm selling put options with a strike of 520. Let's find that strike on the chart. Here, a short period before the upside. The break-even point is at strike 500. Okay, where is this strike on the chart? Here. During this period, MicroStrategy's stock price was in some kind of a channel. There is a resistance line here, which will become a support line as the price falls. The probability that the price will fall below 500 by the end of January is quite low. So what happens if the price falls below 500? We will take a loss in the form of 100 shares of MicroStrategy at $500 per share. If we happen to get these shares, we can sell call options and make covered sales to make a profit for holding these shares. We can additionally sell call options with a strike of 620 in this strategy. And we get a strangle strategy. When bearish and bullish factors collide, the strangle strategy is a very effective one. After all, the price can stay the same or with certain limits. Just by selling put options, we will get 3,500. But if we add strike 620 call options to that, our break-even points move significantly. Now the break-even point on the downside is 478, which is below that price channel I mentioned earlier. So there has to be a very big drop in the Bitcoin price for us to get these risks. But if that happens, we will get MicroStrategy stock at a very good price. This year's local high is right at 476. If the price rises, our break-even point is 664. Okay, 664 is here. That's a pretty good break-even point. I doubt Saylor will abandon his plan to sell shares. If the price ends up in this range, we can expect a profit in the range of $8.5 or $9,000. In my opinion, this is a very likely course of events. There is another variant of the strategy, for example, the calendar spread. This strategy can be built on the current price level, or you can choose a bigger number, for example, 580. So let's sell the options of the new series on January 26 and buy the options of the next series on February 2nd. We get the usual calendar spread. If we manage to guess the price, we'll make a profit of $2,000. Break-even points are 527 on a fall and 642 on a rise. In this strategy, you should choose the strike that you think the price will be close to. The break-even zone is quite wide, and the risks are much less than in case of the strangle. So, if you want to use these strategies, go ahead. Share your opinion in the comments, ask your questions, leave a like if the video was useful to you, subscribe to the channel, and I wish you all the best and successful options trading.